Crop and livestock markets diverged Tuesday as corn, soybeans, and wheat all closed lower, but their livestock consumers soared higher. Live cattle, feeder cattle, and lean hog contracts all touched new record highs midweek. While it's likely hard to complain about the current levels in either hog or cattle markets, a concern that burns brightly on the radar is meat prices. Arguably the most visible type of pork, bacon climbed nearly 36 cents from April to May, reaching $6 a pound for the first time in history. All fresh retail beef fell 3 cents in May to $5.45 per pound, off 3 cents from the most expensive mark set in April. However, the supply concerns are more evident in what's now the smallest cattle herd since 1951. Shane joined us Thursday morning to talk about those concerns amidst this week's new tops in the cattle markets.
I think that we're watching a combination of things coming together, kind of a perfect storm for the cattle market. The live cattle has definitely been driven by that prospect of shorter supplies in the beef chain. Just the number of cattle that are on feed right now and the number of cattle that they're hoping will even be available later on in the year has definitely caused some strength in our cattle futures. For most of the contracts for the next year, we're looking at well over $1.50. And this strength has really been continuing on since about April time. It's just basically almost a linear increase during that period of time. On the feeder cattle side, it's that combination of live cattle prices and then also alleviation of the concern over the coming crop. So the 2014 crop is coming along quite well, and we seem to be getting adequate moisture through most of our corn production states. And so that's helped alleviate concerns about that increasing feed costs later on. We've seen those corn prices come back down to a level that allows some of our producers to actually see some profitability in the cattle finishing, and they are turning around and putting most of those potential margins or profits back into the price of feeder cattle, and that's really pushed our feeder cattle prices back up to well, essentially up to those record levels that we're seeing now.
What do those profit margins look like right now in the feedlot?
Right now for the feedlot, the cattle that are on feed right now and probably on through until August, September, most of those cattle will be coming out of there with a profit margin of over $100 to $200 at least, depending on how they were forward priced. But right now, just looking at where the cash market is and what the animals were placed for and the cost of the feed that was going into them, this rally in the live cattle market has really come back and put a lot of strength in the cattle finishing margins. Going out a little further than that, though, because of the shortage of the feeder cattle, the cattle finishers are having to pay out or pay back most of their potential margins right now. So once we get into cattle that'll be sold in October and then on through the next year, a little bit closer to break evens on most of those returns.
You had mentioned a perfect storm. It sounds like it's raining over in Iowa today as we can hear the thunder behind you here. Now, you mentioned in September when we last talked that you thought it was going to be 2015 before we were able to even start rebuilding this cow herd. Calving next season, more producers are probably going to start to hold back even more heifers. Does that mean that we're going to see sustained high levels in both feeder and live cattle markets?
I think that we will see these prices stay quite high. The futures market is anticipating additional beef coming into the food chain by middle of next year, looking at what those feeder live cattle prices are in the futures. So they think that there will be additional beef available. Just the shortage that we're seeing right now as far as the availability of beef is, yes, there's less in the supply chain. We're still exporting a good amount of beef where we haven't really backed off on that at all for this year. We're keeping pace with what we were last year. And that is really, that extra strong demand that seems to be holding in there so far. Now, how long will that hold, particularly with consumer sentiment? That's kind of a mixed bag. As far as, building the herd, is that drive going to continue to be there? I think it definitely will. The folks that are kind of holding the reins right now and are going to reap some excellent profits for the next several years will be our cow-calf producers. That is going to give them some incentive to build that herd, to expand their number of beef cows that are out there and actually producing. Now, we did see an increase in the number of heifers being retained this year. And, those heifers that were retained, they're going to be calving next year in 2015. I still think that will be the year that we see a larger calf crop. Once those calves are actually ready for market, we're looking at maybe 2016, 2017 before we actually see a turnaround in the supply of beef.
Let's talk about the consumer for a second here. We learned earlier this week the U.S. economy shrunk at a 2.9% rate in the first quarter. How concerning is that for an industry where meat prices are already historically high?
Well, I mean that is data from the past. We did work through that first quarter.
Yeah.
Consumers, whether or not they look at that, pay attention to it, and say, okay, is that going to affect on how I spend my money at the meat counter? That is yet to be seen. I think retailers so far, there's less meat to come through the line, so of course they know that they're going to be selling less of it. But I think that they tried to blend that price change through as much as they can, so as not to dissuade their consumers. There is some margins that are built in there at the retail level. We'll see how those retailers react to it and how that meat counter price ends up responding to this increased price of live cattle over the next several months.
We saw in today's drought monitor that about 50% of Nebraska is no longer in drought, but as you look down to Texas and California, there is still sustained drought there. Has this prolonged drought changed the feeding landscape in the cattle sector?
It definitely has. I mean, we've seen some improvement down in the southern plains states. California is definitely one that's being hit hard right now. What we're seeing there, maybe not as so much as a change in the feeding. If they just don't have feed, they just won't have the cattle there, and we're seeing some plants that are actually shutting down. I think that's almost a reflection also of the feeding that's going on in those areas, even down in Texas. The southern plains states will be several years before they rebuild their cow numbers, beef cow numbers, and you need those beef cow numbers to get the numbers to go into the feedlot. So the cattle finishing that we're seeing, I think that we're going to see continued strength in Nebraska and the northern plains states as far as the number of cattle that'll be on feed. That's where the cattle are. We'll have feed. It's available, and it's a reasonable price. I think there will be that competitive advantage continue on for the northern plains states. I think that Texas will regain some of their cattle finishing. They have some excess capacity down there. I think they'll regain part of that, but it'll be several years to come.